Friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show where we look at what happened in the market today and how we can plan for a better trade tomorrow. So what happened in the markets today? The markets took a reversal while the banks are not that much in agreement with the Nifty index. So this is analysis for December 3rd, Friday 2021. Guys, if you're not subscribed, please subscribe and share it with your friends and colleagues. This will keep us motivated to do this better each time. So without wasting time, let's get into action. We would be looking at all of these parameters that you see in the PreMarket analysis for December 3rd, Friday 2021. We'll look at the Nifty and the BANKNIFTY charts, and we'll also find some stocks in the NSE Nifty 50 index, and then we'll wrap up with that actionable. We'll also look at data analysis on various things that you see here, right side, like open interest, volatility, institutional participation, sectoral performance, global commodities, and all of those. So let's get into it. So this is the price action that you see here. Look at the candle here. A V-shaped recovery is completed, and this is a wide range green bullish candle. Look at BANKNIFTY here. This is a green bullish candle, and the V-shaped movement is yet to complete, but a V-shaped recovery is confirmed. 235 points today, 1.3% up, right? And that is closed. The thing is, it is closed above the previous 4 days candle. 1, 2, 3, 4. This closed above the high of all the previous 4 days of bearish candle. Nifty, that has not happened. It is closed above the previous day's high, right? So Nifty closed 144.6, 0.5% nearly, right, from the and closed above the previous day. Intraday action, if you see, Nifty was trending high from 915, right? Trending high. But BANKNIFTY, it was kind of consolidating, right? It took a dip and then attempted very choppy, right? Look at the range of the moments, right? 300-400 point range dip, and then it faced some kind of resistance near 36,500, and it was more or less flat if you look at it. Hardly with few points, only 0.5% more has happened, right? So yeah, so that's a price action, and volatility expansion of the Bollinger Bands. If you look, you can clearly see that it's still bearish, but right, as long as it is having the bearish side of the lower band, the price is remaining there. It is bearish, and volatility is expanded. Right, Bollinger Band still says it's bearish. Right, BANKNIFTY confirmed bearish. It's still walking on the bands with the volatility expanded on the bearish side. So look at the support resistance. This is what has changed today. So right now it has taken the support of 17,350, 400. So it is at 17,400. So it is in this band of 350 to 450 range. So that can be considered as a support now, right? So the first resistance will be to go above the 400, and then above that you have the Fibonacci 23 retracement as well as projection. The confluence of that is coming here. So 17,500 to 7,600 is the next biggest hurdle. If a close is happening above that, it is confirmed that the market can further move up. And if that is clear, then you have 7,600 to 650 range, and then you have the 850. Then you have the 18,000 resistance zone above that, right? So it's 500 to 600, then 800, 850, and then 950 to 18,000. After 18,100, 200, and 400 and not done. So that's a upside resistance on the Nifty. Downside, you have supports that can come into play at 250 to 300, that range which is clear today. And below that you have 17,000 range where it took support for a while, and then below that you have the 6,900 which is Fibonacci retracement 38 levels, and then below that you have the cap support of 16,700, and 750 that range, right? So that's the what it support serves. And question sort of issue. Bank Nifty, if you see, it is bounced on a support of 35,900 levels, and then 36,500 is where it is closed today. It is facing some resistance at that range, and that can be considered support now. So below support is, if it falls from there once again, it is going to be 35,600, 900, and 35,000 below that, and then 34,750 below that. On the upside, the first resistance that it has to clear would be 36,000 rounding number, and also a previous low. And above that you have 36,900, 37,000 would be next hurdle. Once 36,600 is lower, and then above that we have 37,300, 37,400, and above that we have 37,800. So basically all of those supports that it is broken on now would be acting as resistance. So that's Bank Nifty. What are the bands? We're already seeing momentum divergence. If you see, you can clearly see that the Bank Nifty, the momentum has dipped in the bearish zone. Now it is climbed back today into the bullish zone. Not in the bullish zone, sorry, into the sideways zone. So bullish zone is up here, so it's a long way to go there. So momentum is picked up. Bank Nifty momentum is picked up, but still it is in the bearish zone. Also, there is one, it is not confirmed, but there is a chance that this is a bearish momentum indicator. So it is giving negative reverse divergence because the price is coming down and the RSI is slightly on the edge, slightly going up. It is not confirmed. Only if it moves above this, it can be confirmed, right? So there is some bearishness on the momentum divergence can be seen on the daily of Bank Nifty, and Bank Nifty continues to be bearish, and also there is a negative reverse divergence which is bearish, but Nifty is golden sideways, right? So momentum is caught up, both momentum is improved, but except Nifty is not gone improved as much as Nifty has. Trend indicators are saying that DMI negative is dominating in the Nifty and the Bank Nifty. That means it's bearish in the short term. But you can see that the green, the trend strength, the strength of the bearishness has reduced. It has taken a bend today. Bank Nifty also just taken a bend. So the bearishness is reducing. Basically, the short term is what it indicates, right? In the ADX trend indicators. So that's about volatility. Now volatility. Volatility dropped further today. How much? 7%, and settled at 18. So remember that it had broken out of this 20 range and then gone up to more than 21, which is why it was very choppy and market fell down like anything. Now it has come back to the previous range that it had formed. So it's a range formation that is happening. So probably it is a 15 to 21 range or 20 range where it is trying to cool off and come back. You never know that. It takes some time for it to understand what is the next range that it is trying to form from 21 downwards till when. Right, we'll have to watch that. But it is still 18 is a highly volatile range. Continue to be there. But today it has cooled off is what the point is. 47% IP percentile is cool again on 55 kind of levels cooled off. IV is 16.5 implied volatility. The other one of Nifty. The other one is India VIX. And so basically that's about the volatility. So operators is next one. This data may not be accurate because it's for the 9th December. Not much trading has happened. Might not have happened on the next expiry because today was expiry. We're looking at the data as what is available. Anyway, we'll look at it just for the sake of it. Nifty 17,000 is where the highest support. As of now, the put writing is seen highest there. Then 16,000 is very, very wide range. And the call writing is seen at 18,000. Then after that 17,400, very big range of resistance as you can see. So not big range will come down only after it is traded at least a 1 day. 1.37 is bullish kind of, right? And long bill represent what you see in Nifty for December 9th next expiry. Bank Nifty is seeing 36,000 highest put writing support, and 33,500 is too far away. Right? It's not likely that it may not be true. So 36,000 is first number. Then 37,500 is where the highest resistance is, and 38,000 also huge call writing can be seen as you see in the above the Bank Nifty. Interestingly, 0.57 is close to bearishness in the put call ratio. And short covering is what happens. Short covering is kind of bullish, right? Sometimes more powerful than bullish, right? People have gone short, thinking they are going to go along. That's what has happened in futures data in the open interest. Look at what happened today. See the green, the green everywhere. The major indices, HDFC is the biggest movers. Kodak, so almost all of the banks in Infosys, TCS, and ITC Bank, and NBFC, Bajaj Finance, all performed good, except ICICI Bank. All the big shots performed good, and we had a green overall trend. Right? Overall, good green day. That is the heat map that is over there. Now, sector performance, almost all the sectors performed today. IT closed 2% up, metal closed 1% up, auto closed 1% up, pharma closed 1% up, FMCG closed 1% up, realty closed 0.5% up. So, the thing is, some of them recovered from the momentum from the bearish zones from the sideways zone. For example, IT is in the sideways zone, metal is now in the sideways zone, auto is come back to the sideways zone, pharma is in the sideways zone, FMCG is in the sideways zone, realty also in the sideways zone. So some of the sectors just slipped in the bearish zone, so now it is in the sideways zone, but we just have to wait for it to move the momentum of bullish zones before we can take long trade confidently. Now look at the institutional participation today. Again, small selling, but no FIs continue to sell. Yesterday they sold heavy, today they sold light, but selling never stops when the FI sell. But look at domestic institutions are buying to compensate for that, along with the retailers. That is what kept the market running. This is the money control data. Now, if you look at the dollar index on the right side, if you see, it has cooled off. There's been cooling off last for 5-6 days, and the dollar USD INR currency pair trading also is kind of resisting at the resistance zone near 75, and it is close below that. But the momentum is still there for the currency pair. Momentum has dropped. Things have pulled off on the US dollar index, but USD INR also, right? It is resisting at that zone. Crude oil is cooled off and then gone below 66. Can you believe that? 64, 55.4 is what you see here. So it's dropping below the channel. So that is very good for our economy at least. Crude oil has come down, cooled off. And dollar also is not shooting up, which is probably why the market moved. Look at gold. Gold is consolidating back to a slow moving base, well within the channel of the handle of the cup and handle panel. US market had fallen big as a reaction to the COVID scare, and today's data will have it's not showing any big moves, seems to have recovered, and the Dow Jones is not opened after the yesterday's 464. So we'll have to watch the Dow Jones, the S&P 500, and the Nasdaq, all of these, and the UK 100 and DAX and CAC, French and German markets, and all of these European markets and US markets will have to see that prior to tomorrow's opening and after 12:30 the European markets open. These are times we'll have to watch, which could reflect in our markets sometimes, right? Sometimes SGX may reflect that. Big moves often get reflected. So if there is a very big move in the global market, then it is likely that our market would accordingly get impacted for sure. So watch out for that in pre-market tomorrow. As of now, the data is not available, markets are not open, the entire day is left for the trading to happen, even if it is good. Actionables to Tech Mahindra and Power Grid Corporation. Tech Mahindra is a W pattern breakout that is likely to happen. Momentum is good, the bullish horns trend is good and volume is good. So it could break out all over. IT is kind of defensive. So there is good likelihood that it can break out. Power Grid Corporation has been moving from the COVID times well within a channel. Now it is at the channel, near to channel top, so it can retrace and give a chance to enter once again somewhere in the middle, medium. So it's both a swing trades, not intraday trades. So keep in mind. So enter it when you get a pullback, slight pullback, that's the time, right? Because if you catch it on the top, it may be retracing up till the channel bottom, and then you will be stopped out. So always try to look for the retracement happening before you enter. Right? This seems to be moving in the channel, so you know when to enter. Right? Whenever you get a dip is where you enter. Right now, looks like it may be on the top, so you may get only very little moves. Put tight stop loss and enter only if you get a retracement, and otherwise skip it. Right? So those were two picks, two actionables on the stocks. So the wrap up, my view on the market for tomorrow, short term, is cautious bullishness. So why cautious mild bullishness, not even moderate, right? Cautious mild bullishness. Why? Because Nifty has managed to recover 3.5% from the bottom. After it dips 10%, 3.5% more than that of recovery has already happened. Just 4 days, look at. And the momentum has gone to the bearish zone and back to the bullish zones. Whether it will sustain sideways one at least, we'll have to wait and watch. So that is the good thing, right? But until 17,000, a close above that, it's not that we cannot be decisive on the bearishness. That is what. Overall, the chart still is bearishness. Bollinger Bands, the chart for Fibonacci, all resistances upside. All if you see, it's a bearish chart. The momentum also is bearish. Price also bearish. The mixed price is bullish for 1 or 2 days, but recovery has happened for the last 4 days. But overall, the chart in the short term daily charts, if you see, it's bearish. The momentum is bearish. Trend is bearish. Institutional selling today also happened for Fyers. Negative news on the COVID, this thing is still floating in them. So there is every chance that a correction beyond 10 could extend to 15 or 20. That is very much possible, right? So keep that in mind, and then you have to be cautious and play only with hedges. Play only with hedge strategies and play. Do not go for naked strategies, right? And non-direction also, has to be hedged, right? It's very difficult to play if it climbs back to about 21, 22, 25 kind of levels of volatility once in it. But if it is giving an indication that volatility is cooling off, then you can get back to the flies and current double calendars and all of those strategies, right? On a weekly basis or intraday basis, right? So, but yeah, play safe. The volatility is high and bad news is flying around. And we are in a downtrend right now, short term, very short term if you look at it. Right? So we're not sure whether it has recovered on. So wait for some more time to get the confirmation that from the support and the resistance levels that the market has recovered and the correction is on. Until you get the confirmation, be cautious. But this recovery gives a hope that the bulls are back and that there is no harm in being mildly bullish with tight stop losses, right? So that's my view. I hope it helps you to form your view and helps you to form a trade plan for tomorrow. It's a good one, right? So if you like it, consider hitting the like button and share it to your friends and colleagues. Happy trading and happy learning. Bye.